According to Warren Buffett, learning about stocks helps better prepare people to manage and grow their finances and businesses. But who is Warren Buffett, and how did he become the best investor in the world? Stick around to find out and learn how he did it and how you can do it too. Warren Buffett is the world's best investor. Buffett took over Berkshire Hathaway in 1965, and since then, its stocks have averaged 20 returns each year and given Berkshire an overall of 2.8 million % returns. These figures are significantly ahead of SP 500 yearly total of 23,000. Berkshire Hathaway accomplished this and everything by following simple rules that were simplified in the Buffett/Munger approach. The approach was summarized perfectly by Warren Buffett's business partner and Berkshire Hathaway's vice chairman, Charlie Munger, and highlights 4 simple business strategies. Number 1 is know the ins and outs of the business. Number 2 is compare the business's competitive advantage to that of its emerging competitors. 3 is remember that integrity and talent are the foundations of any business endeavor. And 4, make sure that the payout provides a level of safety to stay in business. However, in these extraordinary times, some externalities must be taken into consideration. We're dealing with highly overvalued stock markets, inflation is at a historic high, and interest rates are projected to rise higher because of inflation. In this video, let's learn from Warren Buffett's advice on each of these 3 key factors of how to deal with these externalities. Remember to leave a comment if you're enjoying and learning something from this video. Help us to reach more people by liking and sharing it with your network. Also, feel free to hit the subscribe and notification bell to learn more strategies. Let's begin with the issue of overvalued stock markets and investments, especially now when everything is expensive. Based on his experience, Buffett avoided investing his money in overvalued stocks and instead accumulated cash and waited for it to grow. Warren Buffett's patience paid off when the Berkshire Hathaway cash pile grew from $18.4 billion in 2016 to $149.2 billion in Q3 of 2021. In Warren Buffett's experience, growing money doesn't happen by buying and selling, but rather by patiently waiting for the right opportunities to present themselves. He proposes passive investment is a good investment strategy. Buffett suggests that passive investment is not about looking for the ideal one-time investments, but rather consistently investing at the same time intervals. By using this strategy, you will get an average market return of about 8 to 10% per year over a long period of time without having to worry regardless of the market condition. Passive investments, however, need a long-term outlook. By just allowing your money to cruise through the tides and earn interest over a long period of time, this technique has proved to work and has survived even the worst financial crisis. Market inflation is another externality that we need to address. High inflation is currently a global trend and has affected businesses, both consumers and producers, and also investors. In May 2021, Buffett predicted the likelihood of high inflation rates, and currently inflation in the US is up to 8.52%. In his annual letter to shareholders in 1982, when the US was recovering from a 20% inflation, Buffett highlighted that many business types, managers and owners ought to be buying in times of excessive inflation. These businesses, however, must have 2 characteristics. 1 is the ability to increase prices rather easily even when product demand is flat and capacity is not fully utilized without fear of losses of either unit volume or market share. And 2, an ability to accommodate high dollar volume increase in business, often produced more by inflation than real growth with only minor additional investments of capital. On the first point, Buffett makes reference to a business that can raise prices with little to no danger of revenue losses and that can survive inflation, which suggests that businesses with a competitive edge are less likely to lose market share. For example, Coca-Cola and Apple are Buffett's major investments. An increase in cost of their product does not cause consumers to favor or change to different brands. These companies have a competitive edge, and therefore, investing in businesses with a competitive advantage will be the best course of action during inflationary periods. Secondly, Buffett advises that investors need to seek businesses that remain profitable without having to increase expenditure. An example of these companies is social media companies. They do not need to create new applications, but instead, they only need to increase the frequency of their advertisements on these platforms. Finally, let us talk about interest rates. The US Federal Reserve said that they are cutting 3 interest rates this year alone. Warren Buffett compared interest rates to stock market values as gravity is to matter, saying that higher interest rates will result in lower stock valuation, which is the case in 2022 and 2023, when interest rates are high and are predicted to continue to rise. Financial managers suggest that personal investing should not only be solely based on the overall economic environment, but it's nevertheless important to know that these are the financial projections for the foreseeable future in order for managers to strategically align the objectives. Buffett advises that one should educate themselves on the ins and outs of running a business. Money and investment will help people make better decisions, calculated risks, and well-planned strategies. We have come to the end of this video. Let us know in the comment section what your thoughts are on this topic and what ideas you found to be useful. Feel free to leave a like and hit the subscribe button.